And on top of all of that, you then have an SEC chair who is resigning, and you're replacing him with a pro-Bitcoin, pro-crypto SEC chair. And so you have all of these factors that are kind of coming together as tailwinds for an asset class. And so the question just becomes like, what would create a scenario or an environment for the Fed not to cut rates? It's really difficult to see a world where they are not going to cut rates, because I believe that the market's in control right now. So from November 2022 to April of 2024, the price was still going up, right? And then we get the halving, and then here we go.
Anthony Pompliano drops a bombshell. Bitcoin is skyrocketing, and it's no accident. Fed rate cuts, a pro-Bitcoin president, Wall Street's massive cash influx, and the Bitcoin halving are colliding to create the perfect storm. Could this be Bitcoin's biggest bull run yet? Stick around for Pompliano's shocking insights you don't want to miss.
Well, Bitcoin is going up because the Fed is cutting interest rates. They're printing money. You have ETFs that opened up access to the market. You also have a bunch of public companies that are buying Bitcoin. You have a pro-Bitcoin president that's assuming the White House. And on top of all of that, you then have an SEC chair who is resigning, and you're replacing him with a pro-Bitcoin, pro-crypto SEC chair. And so you have all of these factors that are kind of coming together as tailwinds for an asset class. And I think one of the most important things is people already have forgotten that we had the Bitcoin halving in 2024. So there was this supply shock that occurred. So there's 50% less Bitcoin coming into the daily supply every single day now. On top of that, you have Bitcoin that is leaving exchanges. We have an all-time low of Bitcoin on exchanges at the moment. And so there's just not that much Bitcoin available. At the same time that supply shock is happening, you have a lot of capital coming into the market. And I think Wall Street, sovereign wealth funds, large countries, central banks, but also just big hedge funds, big financial institutions, they feel like all of the career risk has been removed. Now we are watching Bitcoin go from a contrarian investment to a consensus trade. And when that happens, capital flows really, really fast. And so if you have a finite supply asset that is very scarce in terms of its availability, and you have a lot of capital pouring in, there's estimates as much as $3 billion per day coming into the Bitcoin network, obviously the price is going to go up. And so if you go back to November 1st, we were sitting at $69,000. Today we're at almost $108,000 45 days later. That is the type of speed at which an asset like this can move. And so I think people on one hand are surprised, but on the other hand, this is just economics 101. You just had to go to high school or freshman year of college, pay attention in one class, understand supply and demand, and you could have been the greatest Bitcoin investor of all time. Supply is limited, demand is increasing, the price has to go up. It definitely matters for Bitcoin, because if investors believe that cheap capital is going to come into the market, they push out on the risk curve. Now, one of the interesting things is we are going to find out whether the market dictates what the Fed does or the Fed dictates what the market does. And what I mean by that is at the end of 2021 in November, the Fed started talking about, hey, the market's overheated. We're going to raise interest rates. We really need to get, kind of the frothiness down. And so that was the Fed dictating the market.
Right.
They said, we are going to raise interest rates because we need to do it. And then the market responded. Right now, we see inflation creeping back up. So they've cut 75 basis points. They're expected to cut this week another 25 basis points. That was kind of the guidance in the second half of this year, was they're going to cut about 100 basis points or so. But if inflation is creeping back up, again, strong argument to not cut rates. Just pause. Just let things go. The problem is that the market is pricing in the interest rate cut. And so if you surprise the market, it can have some really negative impact.
Interesting.
And so if the Fed cuts interest rates, that tells me that the market's in control right now. The market is dictating to the Fed what they need to do. Now, on top of that, what's really interesting is if you go and you look at the S&P returns in the second half of December of the end of a year, there is a very fast growth in stocks. So kind of the second half of the year, from December 15th to the end of the year, you see asset prices go up. People are preparing for the new year, they're rebalancing, they're doing all these different things, but they're getting enthusiastic. Hey, we're closing out the year. Let's try to eke out the last bit of return. And so you see in the stock market, 2 to 3% gained just in that last 2 weeks or so. Bitcoin historically in bull market years has really done well in December into March of the following year. And so we kind of have this 3 to 4 month period where Bitcoin historically has done very well. It looks like it's doing that already. Again, it was $69,000 in November 1st. It's going much higher. We're already at 108,000. It's going to go higher than that. And so again, if you are the Fed and you're cutting into what is already kind of a tailwind to asset prices, you're going to accelerate that. And so the question just becomes what would create a scenario or an environment for the Fed not to cut rates? It's really difficult difficult to see a world where they are not going to cut rates, because I believe that the market's in control right now. The market's in control right now is because we're putting a guy in the White House who believes that the stock market is the measurement for the health of the U.S. economy, and Bitcoin's price, he now believes that that is part of him taking credit. Of course, when Bitcoin hit 100K, Trump said you're welcome, because he now is looking at it as the Bitcoin price is basically a proxy for whether people are excited about Trump's presidency or not. If the price goes down, he'll be tweeting about it, right? But the fact that it's going up, he's looking at that as the market is enthusiastic, the market is excited that I'm coming into the White House.
Anthony Pompliano breaks down how multiple factors are fueling Bitcoin's unprecedented growth. The Fed's interest rate cuts and money printing are making capital cheaper, while ETFs and public companies investing in Bitcoin increase demand. Political shifts, including a pro-Bitcoin president and an SEC chair who supports crypto, add even more momentum. Add in the 2024 Bitcoin halving that drastically reduces the supply, and the picture becomes clear. Bitcoin is in a supply shock. With Bitcoin leaving exchanges and capital flowing in, the market is accelerating. Pompliano highlights that Bitcoin is transitioning from a contrarian investment to a consensus trade, attracting big players like sovereign wealth funds and financial institutions. In just 45 days, Bitcoin's price has shot up from $69,000 to nearly $108,000. And Pompliano believes this is just the beginning. Stick around to learn how this explosive growth could continue.
Because I think one of the big thought processes was Bitcoin is competitive with the US dollar.
Got it.
Obviously, if you control the global reserve currency, you have the dollar, you can print it on demand, and you're able to use this to control interest rates, the flow of capital. There's a lot of things that you can do in terms of geopolitics, etc. You don't want someone to come along and create something that is going to take that power away or take that special privilege away. What now has transpired over the last 4 years is that people realize, wait a second, the dollar's more popular than it's ever been, and so is Bitcoin. And so this is a Bitcoin and dollars are rising together. And actually the competitors who are falling are not dollars or Bitcoin, it's all the weak fiat currencies. So people are getting rid of the weak fiat currencies and they're saying, hey, if I want to spend money, I want dollars. That's why stable coins have become so popular, $200 billion or so in the stablecoin market. If I want to save money, I want to do it in Bitcoin. And so you get, again, it's why I use the framework of just like in your traditional bank account, you have a savings account, you have a checking account, you have a brokerage account. In the digital world, your savings account, your digital savings account is Bitcoin. Your digital checking account is stablecoins with $1. And then your brokerage account is basically all these other assets that you can buy, sell, whatever, whether they're altcoin stocks, etc. And so I think that Bitcoin and dollars kind of thriving together, that's like Trump's dream, is he can basically sit there and say, hey, the US dollar is actually getting more adoption globally. It's more popular for bilateral trade than it's ever been before. And at the same time, this Bitcoin thing is also going and getting more popularity. So I can be anti-government on one hand with Bitcoin and kind of, the fact that it's decentralized, it can't be censored, it can't be seized, etc. But also I can protect the interests of the United States and I can go and make sure that the dollar is successful globally. And so again, it's just those two things happening together. We didn't understand that 4 or 5 years ago. Everyone thought that they were competitive. Now that they're not.
Yeah.
When there was a bull market as well,
was
right?
there a bull market in 2020?
Yeah, 2020. There was halving. It was the halving year. So in May of 2020, there was a halving, right? Bitcoin was kind of going sideways. Going into the end of the year, Bitcoin went ballistic. It went from about $10,000 to $64,000 in March of 2021. Yeah. So it's not like Biden showed up in January and all of a sudden, in the middle of that run at 30, 35K, he can take credit for the run from 10 to 64, right? He just assumed office. And so although Trump was kind of leaving office as it was happening, obviously he was, a part of that. Again, the Fed and the politicians, both through fiscal and monetary policy, they basically laid the groundwork by printing trillions of dollars and suppressing interest rates to zero for risk assets to go up. And that's what people did, is they basically said, hey, there's a Fed put in the market. I'm going out on the risk curve. I'm going to go buy these assets, fixed supply asset, a lot of capital coming in. I remember writing in 2019, 2020, calling it rocket fuel for Bitcoin. They're going to print money. They're going to drop interest rates and we're going to get the halving. Well, guess what they're doing right now? We had the halving. They're cutting interest rates and they're printing money. It's rocket fuel all over again for Bitcoin. Depends on when you actually measure like it's starting. So an easy way that a lot of people point to is they look at when the halvings occur and then they say how long from that halving until kind of the peak of the bull market. Usually that is approximately 18 months. It could be 16, could be 22, whatever, right?
I was thinking
but
a year and a half.
About a year and a half. So if you think in May of 2020, we get the halving. The peak was November of 2021, right? So like that's kind of a traditional bull market. What's interesting about that is the bull market technically doesn't start when the halving occurs, right? There's at some point when the market bottoms. So if you look now, the halving was earlier this year. I think it was in April of 2024, but actually the market bottomed in November of 2022. So from November of 2022 to April of 2024, the price was still going up, right? And then we get the halving, and then here we go. And so it just all depends on like, where do you want to pick your starting point? But I do think that the halving for about 18 months is kind of a good maybe framework or barometer to look at. The other thing that I would say that is pretty important here is the 4-year cycle has been true up until today. The question moving forward is, has the market substantially changed? Because you are moving away from having lots of capital inflow from merely retail, and you're now moving to things like institutional capital flow. So for example, MicroStrategy gets added to QQQ. And so as being part of that NASDAQ 100, you now have trillions of dollars that is going to flow towards stocks that are in that index. Okay, if that's true, that means MicroStrategy is going to have kind of this persistent bid of people who are constantly buying it as the index goes up. Well, when that occurs, now all of a sudden he's got access to capital regardless of what's happening in Bitcoin. So it's kind of detached from, the Bitcoin price movement. And so he can be a persistent buyer that smooths out some of the volatility. ETFs are another example. Just because all of a sudden you get a price coming down, whereas retail maybe was selling, you may actually see the ETFs are constantly buying. They're still getting capital inflow because it takes time for these institutions to get comfortable allocating to Bitcoin. And so one of the arguments, and I think I'm probably sympathetic to this argument, is that actually we are probably done with these really drastic 4-year cycles. And so Bitcoin on the upside doesn't go up on a percentage basis as much as it did before, but also on the downside, will we ever see another 80% drawdown? Never say never. It's just the odds are decreasing that we're going to have those significant drawdowns. And maybe it's a 40 or 50 or 60% drawdown. So it doesn't mean that, hey, Bitcoin will never go down again. It just means that there's a big difference between a 50% drawdown and an 80% drawdown.
Yeah.
And so I think that's really some of the questions that the, insiders, if you will, or the folks who spend all their time on Bitcoin are trying to figure out is, when does the market cycle peak? How big will the drawdown be? And how do you change your capital allocation based on kind of a lot of those factors?
Anthony Pompliano's insights paint a clear picture of Bitcoin's explosive growth. With demand surging and supply tightening, the market is set for even bigger gains. Don't miss out on what's to come. Like, subscribe, and hit the bell to stay updated on the latest developments in Bitcoin's rise. Thanks for watching.